I see people jumping in.
Hi.
Hi, Lois. How are you?
Hey, I'm good. How are you
I
doing?
can see people jumping in. We've got about 30 people already jumped in, so just bear with us, people. Hi, James.
Sure.
Hello.
Hi, James.
How are you?
Hello.
Keen crowd. There's 42 people jumped in already, so just be careful
wow.
what you say right now.
Quick.
Mhm. So I can hear you, Lois. I can hear
Okay.
James.
Where's Anne?
Don't see Anne on yet.
Oh,
There's Anne.
There's Anne.
there she is.
Hi, Anne. Let's do a sound check.
Hey there. Can you hear me? 1, 2, 3.
Yes, absolutely. That's excellent. I'm just saying there's a keen crowd you have. There's 54 participants already in. So those people that are just jumping in right now, just be aware that we're just jumping in. What time is it? Like 8 minutes to, just to make sure technically we can hear each other, we can see each other, and that we give you a good event today.
Cool. So when the questions come up, are you going to be reading them on the Q&A, or how is that
No,
going?
you two, you and Anne have a look at those, Lois. You've got the Q&A button down at the bottom.
Okay.
And chat. So if you
Okay.
look down towards the bottom of your screen, you'll see that Q&A and chat. Now, some people may come in through Q&A, other people may come in through the chat. I have in addition to what people might put in Q&A or chat, I can't really count them, but it's probably at least 30 or 40 questions via email. A lot of them very similar that can be categorized in a similar theme.
Okay, great.
But I'm just pulling, I don't know how many monitors you have. I have 6. So that when you see me look around, it's because I've got 2 rows of 3. I don't know how many you have.
Just 2.
Oh, okay. So it's often with Zoom, it's nice to have all 4 of us in the screen here. And then I bring up the chat and Q&A window, and I move them. I just grab the window and move it to another monitor, and then you can.
I have monitor envy now.
Yeah.
No. Yeah. Have to get a couple more.
And I do use them all. So
great.
yeah, move the chat and the Q&A boxes to another screen, and then you can open them up large and see them all.
You just drag them over there.
Yeah, you can just drag the. You can open up the chat or the Q&A, and then just drag them, like you do any window, to another monitor.
Oh, I see.
So I've got Sarah saying hi. Hey everyone, hi peeps. Hi Sarah. Hi is it Lida? Hi Lida. You can see those coming in under chat?
Yes. Great.
So yes, for those people just jumping in, which is now 74 people and rising, we haven't started. We're going to start on the hour. We're 5 minutes out. We're just doing a technical check and making sure everybody's set up correctly. Hi Laurie, Jack and Leslie, Francesca. So I can see, Lois, you have San Francisco behind you. What have you got behind you, Anne?
I have Lake Tahoe.
I thought it was the Loch Ness Monster there. It looked like...
Yeah, there's the Loch Ness Monster behind me over there. I think right there.
You'll notice there's no traffic on the bridge as well.
No, there isn't.
Yeah.
No, see that.
It's Imagine unusual. That's unusual. Yeah.
That is unusual.
I'll be right back.
Now let's see, I didn't ask you if we want to mute our own sound.
Well, down in the bottom left-hand corner, you can click on the word. You can click on the word mute, and it'll put a red cross through it.
Okay.
And
there's Anne walking on the water. Good job.
It's amazing what I can do.
For those people joining, I usually, up in the top right-hand corner for those people joining, there is a couple, if you put your mouse up into the top right-hand corner, you can see there's a few different options. There's gallery view, which usually whoever's speaking is then taking up the whole screen and everybody else is over to the right. I prefer to have it on speaker view, so all four of us have equal position on the screen. That's how I have it set up.
Mhm.
I'm not sure how.
I see someone was saying the audio is cutting in and out. I don't know if it's on their side or on our side.
Sometimes if you're living in a house where there's a bunch of kids gaming or sucking up the Wi-Fi in your house, that can be the case. We have done a complete audio and video check prior to this session, and all four of us are good. But often participants can go in and out because of their own system in the house. We can't really do anything about that. But yes, I see everybody, we've got 2 or 3 minutes. What I do suggest, people are asking about questions. We do have a bunch via email. If you want to ask any additional questions, then do use the, I would use the question and answer section at the bottom of the page. There's a Q&A at the bottom of the screen, a Q&A. I would use that to ask questions rather than the chat. But we'll just go over some housekeeping when we get started in a couple of minutes. Okay. All right. Okay, Sarah. Sarah's just saying, okay, so you're tethered to what I choose. Oh, interesting. Okay, well, I didn't realize that. I've recorded that many and never realized that, because I always have this view where you can see everybody. I don't like it where it just keeps cutting in and out to the person who's speaking. I like to see all four. I think it gives you a better experience.
Mm-hmm. I think it's less distracting that way when you have all four.
Yeah. I don't like it when it goes to the full screen of whoever's speaking. I can see you, Jennifer. I can't. We don't see. We only see the panelists and the people presenting on the screen. But if you can hear us, then you're definitely signed in and you're chatting with us, so you must be signed in. Everybody's muted, Pamela. Nobody can. We can't hear any attendees at all. It's set up that way. Otherwise, we'd have all sorts of background noise going on and all sorts of things happening. So everybody who's watching is actually muted. Christina, same for you. If you can hear us, then you're all good, but nobody will be actually chatting. Where you ask questions is through the Q&A box at the bottom of your screen. Becky's asking if I should take Social Security. I'm 66.
That's a good question.
Good question.
So, Lois and Anne, you've got your Q&A and chat screen open then?
Yes.
Good. Okay. All right. We're on the hour, which is 3 o'clock Eastern for James and I, but 12 noon for you guys. So let's get rolling.
Okay, let's get rolling. Hi. Hello, friends and clients of Financial Fitness Center. Thank you all for joining us today. And the goal here is to learn about how you can take advantage of the government programs that exist out there. My name is Lois Lindsay. Most of you know me. I'm the founder of the Financial Fitness Center in Oakland. It's a tax and financial services firm. My partner, Ann Lowry, is with us today as well. And although you can't see them, the rest of the Financial Fitness Center team is on the call as well. At Financial Fitness Center, we've been inundated with a tremendous amount of information, constant changes and questions due to the pandemic and the new IRS rules and the economic stimulus package called the CARES Act. Our goal with this web class is to help our friends, clients, and their businesses survive this disruptive time. As our presenter today, we're privileged to have our own business coach, James Rainwater, who's a CPA, and his marketing tech guy, Craig Uri, with us to deliver the web class on how to get money from the government programs. James is a nationally recognized CPA and tax strategist, I should say, and a business coach who has a team working tirelessly on understanding and guiding individuals and businesses through the complex new CARE Act. We found James through an old friend of mine, Barbara Tapella. Thanks, Barbara. I know you're on the call. As we were gathering information to help ourselves and our clients seek benefits from this massive rescue package signed on March 27th. Because these issues are so incredibly complex, and we chose to engage James as our coach to understand what we needed to do for our business and for our employees. As our business coach, James generously offered to do this web class for our clients to give you an overview of the CARES Act and ask the many questions that were coming up. I hope this helps you all to gain some benefit from this new stimulus package. So I'm going to turn it over to James and Craig.
Great.
Thank you, Lois.
Thank you.
Do you want to go, James? Do you want me to?
Yep, I can jump in.
All right.
Yeah, thank you. I appreciate that introduction. That's very kind. And I appreciate, Lois, both you and Anne having me today to reach out to your clients. You mentioned, we've got a team together that's been following the CARES Act and the Families First Coronavirus Act from the very beginning. And our goal in all of this has been to help save as many businesses as we can. These are unprecedented times with mandatory shutdowns and a lot of unknowns. Even in the answers, there's unknowns and more questions. So you'll see today we may have some of the answers maybe I just don't know. We have to look into that, or we don't have guidance on that. But we'll do our best to get you information as current as we have it right now and pass that along to you. I'm going to go over, kind of walk through a few items that we think are important. We met and think these are really good topics to at least do an overview of. So I'll go through those for a few minutes, and then I know we've got questions pouring in, so we'll jump into the Q&A. And if you have a question now or as we go through, you can throw that into the Q&A or into the chat, and we'll monitor those and get through questions. So with that, let's kind of do an overview of the CARES Act. We broke this down into some individual benefits. If you're an individual, how can you benefit from the CARES Act? And individual and self-employed, how can you benefit from the CARES Act? And then, if you're a business owner, you're running a business as a sole proprietor or self-employed, or if you're even a partnership or a corporation, what is available to you in terms of relief and credits. We'll talk about that, and then we'll touch on real estate investors and how the Act is interpreted and applies to rental property owners and real estate investors as well. So with that, and being respectful of time, we'll jump right into...
Can I just quickly do some housekeeping, James?
Mm-hmm.
Yeah, I'm going to moderate. So Craig, I'm just going to moderate. So we're going to be going probably 60, 90 minutes. You've got the Q&A down in the bottom to ask any questions, so use that for any questions under the Q&A. I've got about 60 emails that came in, plus the Q&A that we'll probably get throughout this. Nothing's been rehearsed, by the way, so just bear with us. We're being prolific. We're not being perfect here. So there's been no rehearsal. It's important to get this information to you, and I thank Lois and Anne and their team for doing that. At the end of the presentation, we will give you access to our resource guides and playbook, so you can do this yourself. But for those people that may want to engage James, we do have an opportunity which we'll share at the end also. If you want to engage James, like the financial team here did, to have James's team work on making this happen for you. So we'll have information towards the end about that as well. Otherwise, I'll be here. Jump in, anybody, whenever you need to, and let's get rolling.
Yep. Yeah, feel free to stop me or interrupt me if there's questions that come up that are relevant or you guys need anything. All right, so some of the individual benefits, most people have probably heard about the rebate right now where the individuals can get a rebate check. They're in process, or by in process we mean that the IRS is figuring out how to get those out to individuals and the families. It's a $1,200 rebate check for an individual, $2,400 for a married family. And there are some income limits on that. It's up to $75,000 for an individual. You should qualify for the full $1,200 rebate check. Up to $150,000, you should qualify for the full married couple $2,400 rebate check. It's a little different with head of household. There's a $112,500 income limit for that, and you would qualify for the individual rebate check. So those are, they phase out over those different income limits that I just mentioned, and they're 5% per $100 above the income limit. So for an individual that's going to completely phase out, you won't receive a rebate check if your income is over $98,000, and for married couples, you won't receive a rebate check if your income is over $149,000. Rebate checks are supposed to be automatic. So if you filed 2018 or 2019 tax return and you have had direct deposit of any refunds or paid via direct debit, then the IRS has your banking information, and that's going to be automatically sent to you via direct deposit. The rebate will be. For those who pay by check, maybe you owe tax and you normally pay by a check, the IRS is supposed to be opening up a portal on their website where you can go in and put direct deposit information, put in banking information. I'm not sure how they're going to control that with identity protection, so that might be why it's taking so long to get that portal set up. But my understanding still is that they're going to have that portal set up where you can go in and put your information in, so that you can get that rebate check faster than a check, because they're saying a check could take 3 to 4 weeks in addition to get those out. So that hopefully we'll have information on the portal being up. I did check yesterday and it wasn't up yet. I checked on the IRS FAQ website and that was not up yet. And in addition to the individual and married rebate checks, there's also a child portion. So for qualified children, which is children who live with you under the age of 17, there's also a $500 additional credit for each of those children.
Can I just jump in here for a second, James?
Sure.
I want to point out, since I see some of the questions, if it'll be based on either 2018 or 2019 income, whichever has been filed. So if you have not filed 2019 and that income is lower this year, file quickly, because that'll help you get the full rebate. If income was lower in 2018, it might behoove you not to file your 19 return so that they can base it on last year's income.
That's a good point. Okay, so the next thing we want to talk about is retirement withdrawal. There is a provision in the CARES Act where you can withdraw up to $100,000 from your qualified retirement accounts. That withdrawal can be made without penalty. So the penalties are waived if you're impacted by the coronavirus. So you do have to self-certify that you've been impacted by the coronavirus. And you can withdraw from an IRA. If you're currently employed, you can take a loan from a 401k up to $100,000 as well. The penalties are waived for early withdrawal, and the taxes are also deferred. And we're not exactly certain on how this is going to work right now, but we've been told that the legislation states that the $100,000, the taxes on that withdrawal can be deferred over 2 additional years, or if the amount withdrawn can be rolled back into the retirement plan over those 2 additional years without taxes being incurred. So while this is, a strategy we don't necessarily recommend unless it's really necessary, because we don't want you to go and take money out of your retirement plan that you need for retirement, unless you absolutely need to. But for someone who is impacted by the coronavirus, who needs that cash flow, it's an urgent situation, that is available to you without the additional burden of penalties, and you would not have the burden of tax in this year, but we would recommend that you plan very carefully for that so that in future years, it's not an additional burden to you. Okay, unemployment. So I will say from the start that I am not an unemployment expert. I am definitely not a Social Security expert, but there are unemployment provisions in the CARES Act, both for individuals, employees, and for self-employed individuals. So state by state, you can apply for unemployment benefits for reduction of work or reduction of pay. So if your employer cuts your hours, your employer cuts your pay by 20% or 25%, you can apply for unemployment for that differential. You can also apply now for unemployment as a self-employed individual. So if you're, we have we've done a lot of work with the Spa Association in the past week or so. So if you're self-employed and you maybe a self-employed esthetician and you work with clients and you obviously can't work right now if you're under a mandatory shutdown, so you have lost that revenue, you can apply for unemployment in that situation. Whereas in the past, you couldn't always do that. So that's a big requirement to place on states, since unemployment is regulated by the states and implemented by the states. Every state does it differently, and every state has their own website for how to apply for unemployment. So we're seeing, it's taken states a little bit to catch up to that. I haven't firsthand, I don't have any experience with any clients that have been approved for unemployment as a self-employed individual. So we think it's taken states a little bit of time because they don't have the manpower to answer phones and help people through the process. They need to get their websites up to speed. And I think, Anne and Lois, we talked about this earlier with California, is having that same issue where their website just isn't up to where it's supposed to be with the CARES Act, but we're sure they're working on that. And it's something day by day we kind of monitor to see when that's going to be up and running and available for people to apply for unemployment.
We have a bunch of resources in our guide, don't we?
We do.
Yeah.
We have links to all the states, to all the unemployment sites for the states. And our resource list, we also have both public programs. We also have state and local and city relief programs, grants, loans. And then there's also a few private programs that we have links to in the documents as well that Craig and you'll get out later today probably, or tomorrow.
Yeah, I'll give you the link at the end. Plus, you'll be able to get it via email as well.
All right, Dina says that she was able to apply in California, but it was very confusing. Yeah, that's the problem. With the changes in the websites and the process for applying for unemployment, it's different, it's new, and it's confusing. And no state has the manpower to be able to field phone calls when you need help doing it. So we have seen where I actually had talked to someone last week where they had applied for unemployment. It got rejected because the system wasn't ready yet, and they have to reapply this week. Hoping that the system is working again. So there might be issues like that where you get rejected first time around because the system isn't updated, and then it gets updated and you have to apply again. We also saw that with the SBA with some of their programs.
A lot of the questions I got in via email that are coming in, a lot of them are relating to employment, which James is not an expert in the unemployment. Mm-hmm. We will give you our resource guide at the end, but the other theme of the questions, James, generally is there's a lot of self-employed, sole proprietor type businesses on the call that may have just themselves or maybe some 1099 or W-2 people. So a lot of the questions, mm-hmm. or a lot of the theme of the questions, just so you're aware, are around that sole proprietor, individual business owner type questions.
Sure.
That's what I'm finding.
Yeah, one of the questions we get a lot, and I've seen this one pop up a couple of times here, is, let's say I'm a sole proprietor, and right now maybe my business is shut down, maybe I'm just operating at a low level right now. Can I claim unemployment? But can I also apply for the SBA grants, loan programs that I'm going to talk about in a few minutes? And the answer is yes, you can apply for both unemployment. You can apply for the Paycheck Protection Program. You can apply for the economic injury disaster loan. And we'll talk about those programs in a minute. But so just having an understanding of unemployment and the way unemployment works, and then the Paycheck Protection Program, there's a forgivable piece that we'll talk about. But if you, as a sole proprietor or as a self-employed person, you take one of those benefit programs or a loan and you use it for its intended purpose to pay yourself, that income in paying for yourself is probably going to reduce your unemployment benefits, at least temporarily. So typically when you have unemployment, you have to report other sources of income. So to the extent that you take one of those other benefit programs and use it to pay yourself, it's going to reduce your unemployment benefits, at least for that period. That was the intent. That was actually the intent of the legislation, was to get some of this emergency funding out to businesses quickly to be able to pay for payroll, to be able to pay self-employed individuals so that they would not have to use as much of the unemployment program. All right, any other questions we want to take right now? I know we've got kind of a Q&A 5 to 10 minutes scheduled in here. Do we want to answer questions or keep going with the programs?
Is there a way that you want to do it, ladies? Because otherwise we can go through the specific questions and then go straight to Q&A and get. I've got like 33 here, 15 here, and about 60 over here.
Why don't I?
So if we want to get through all these questions, if you want to do the high level, James.
Yeah, why don't I finish that up?
And then we'll just
we'll just jump into questions after that and go full into questions. Okay,
and I would do that high level, unless, and correct me if I'm wrong, based upon the majority of people on this call being sole proprietor, self-employed sort of business owner with maybe a few 1099 or some W-2s or none at all. Am I correct in thinking that?
Well, I also see a number of questions about, is it adjusted gross income to determine their $1,200 a stimulus check, or what's that income based on?
My understanding is it's adjusted gross income. It is based off of AGI.
So yeah, I think we should finish the overview and then get into the questions because there are a lot of them.
Okay,
right.
Sounds good. Okay, so then we want to talk about a couple, these are kind of under the business provisions of the CARES Act. It's actually partly from the Family First Coronavirus Act and then the CARES Act. And when we say the business benefits, we also mean they apply to sole proprietors, self-employed, and corporation owners and partners and partnerships. The first is the Economic Injury Disaster Loan, which is a loan from the SBA, funded by the SBA, backed by the SBA, and the application process is also through the SBA. This has been confusing for a lot of people because typically you don't get an SBA loan directly from the SBA. You get that through a bank, through an SBA lender, but the Economic Injury Disaster Loan is directly through the SBA. The whole application process is through the SBA. Currently, they have a streamlined, simplified application for the EIDL. We call it the EIDL. You submit this streamlined application online, and then that application, you get a confirmation number, and then that application is assigned to a loan officer. We're seeing about 2 weeks until it's assigned to a loan officer right now. I actually had a client approved on Monday and received her closing documents, so we're glad to see progress is being made on the EIDLs. But it's a simplified application process on their website. You get that confirmation, it's assigned to the loan officer, and then that loan officer is going to request an underwriting package. And that's going to be the full package you may or may not have heard of at the very beginning when this all started, but they're going to be looking for tax returns from 2018, 2019. If you don't have 2019 tax returns, they will accept financial statements. And this applies across the board, whether you're sole proprietor, self-employed, partnership, or corporation. They want to see tax returns for the business and individually. Sole proprietor, you're just going to have your tax returns, your individual tax returns. If you're partnership or corporation, they'll want to see those business returns in addition. If you've not prepared or filed 2019 tax returns, they just want to see financial statements for 2019. So those do not have to be completed and filed necessarily for the underwriting package. And then also want to see personal financials for any owner over 20% and requests for transcripts, the Form 4506, and schedule liabilities for the business, which includes accounts payable. So those will all be part of the underwriting package. And then once the underwriting package is submitted, they'll do a loan approval. With the EIDL, you cannot request a loan amount. You just submit the information that they request, which is gross revenue, cost of goods sold. They also request any rent impairment, any rental income impairment, so lost rents. If you're a landlord and you have rents you collect every month for tenants, if you started to incur losses from that already, or I have one client who waived April's rent for their tenants. So April would count as lost rents that they can put into that input screen on the economic injury disaster loan. We don't know exactly how they're calculating the loan amounts. We've heard there's different calculations depending on the industry and depending on the information that they receive. So we don't know exactly how they're calculating those loan amounts and funding those. I know that the one client that's been approved, I was surprised. I was definitely surprised by the amount of the loan that's being funded to her. Along with the EIDL, when you're submitting that streamline application, there's a little checkbox. I think on the third page, there's a checkbox that says, I want to receive an up to $10,000 advance on the loan. And at first this was called a grant. And at first it was called the $10,000 grant because everyone kind of assumed, and the legislation was kind of written that everyone would immediately be eligible for a $10,000 grant, or every business would receive the $10,000 tax-free grant. And now the SBA has been very careful over the last week to change all that wording to up to $10,000 grant, which seems to imply that some people could receive less than $10,000. Again, we're not certain how that's calculated. I don't have a client that's received that in their bank yet, so I don't know what amount that's going to end up coming out to. We don't know if there's any underwriting review before that grant amount is dispersed. What we do know, and the SPA has confirmed, is that if you apply for the EIDL and you receive some amount up to $10,000, and then you decide not to close the loan, or you're not approved for the loan, you do not have to repay that money back, and it's not taxable income to you. So it does convert to a grant. It's interesting, the wording, they did change the wording to advance on the streamline application. They've changed it from grant to an advance. So we think that if you're approved for the loan and you accept the loan, that money is going to roll into the loan. But if you do not close on the loan, it'll be a tax-free grant to you. And the grant, the advance amount is available. Anyone that is eligible to apply, and there's a fairly short list of businesses or types of businesses that cannot apply for the EIDL, but definitely, sole proprietors, most partnerships, corporations can apply for those. Real estate landlords, rental operations can apply for the EIDL as well. The next loan this was the one that's very popular in the media and you've probably heard about, it's the Paycheck Protection Program. It's currently, $350 billion in funding for the Paycheck Protection Program, first come, first serve. We did hear yesterday, and they're in continued talks today to hopefully vote on, the Congress is in talks to vote to increase that funding, probably almost double that funding. So that's much needed. It's been a very popular program, and a lot of applications have gone through. For the Paycheck Protection Program, right now the applications that are open are for businesses that have employees. So if you have W-2 employees, you can request a loan up to 2.5 times, the maximum loan amount would be 2.5 times your average monthly payroll. There's a little bit different calculation for seasonal businesses that you'd want to run through, and we have some assistance tools for assisting with that calculation. But it's going to basically be 2.5 times the average monthly payroll, either for 2019 or the 12 months ending February 29th, 2020.
James,
There's actually some leeway there. Okay.
James, would it be helpful if I pull up that SBA loan comparison chart?
Sure. Yeah, that would
I
actually
mean,
be helpful, and that's part of the documents we'll get out to you.
yeah,
You'll have this comparison.
yes, you will. But if I just share the screen, right. Well, I've got 6 monitors, so I've got to check the right monitor.
Yep. Don't share the wrong one.
Okay. Can you see? Can everybody see that now?
It's coming. There we go. Yep, we can see it.
So this might be helpful for people to visualize.
Yeah, so we've got on the middle column there is the EIDL, which I just talked about. The part I did not mention is that it's a more traditional loan, but it's got a very long period. It has 30 years that it would be amortized over. 3.75% for businesses, 2.75% for nonprofits, and it is backed by the SBA. The Paycheck Protection Program, again, is based on W-2 employees and average payroll. There is so we talked about the payroll piece. It's also available, the Paycheck Protection Program is also available for self-employed individuals. It's going to be based off of your profit or your net income. We think they're going to want either financial statements or the 2019 tax return to justify or to substantiate that amount that's being claimed. But most of the Paycheck Protection Program you'll see is either substantiated by payroll reports or tax returns, and then there's also self-certification that goes along with it. So this Friday, the loans will open up for self-employed individuals to be able to apply for the Paycheck Protection loan. In addition to, it's already open to businesses with employees. Once that loan is funded, once we call it the PPPL, once that is funded and it's in your bank account, it opens up an 8-week window. And during that 8 weeks, if you use the money from the PPPL on 75% of it has to be spent on either payroll or self-employment. And then the remaining 25% can be spent on rent, utilities, business mortgage interest. Then the amount spent during that 8-week window can be forgiven. The loan would be forgiven. There would no longer be a loan for that amount, and it would not be taxable. It's considered a tax-free grant of that money, so it's not a taxable event on that money either. So for those amounts that are not forgiven, it does roll into a loan. It's going to be 1% for the first 2 years, and then it can be refinanced into a 4% up to 10 years. So a few caveats on the Paycheck Protection loan and the way that amortizes.
You want me to scroll down?
Yep, sure. Make sure. I think we've covered most of the major points on that. The important thing with the Paycheck Protection loan is going through your employee costs, your payroll costs, and your self-employment income, making sure you're qualifying for the maximum loan amount. The best amount, the highest amount that you can qualify for. So that's one piece of the Paycheck Protection loan. And then the second piece is, preparing the documentation for that audit and making sure the money is spent properly to get as much as possible forgiven. The more we can get forgiven out of that Paycheck Protection loan program, the less that rolls into the loan, and that's certainly a big benefit of that program. Another comment is that you can't take the full benefit of both the EIDL and the PPPL to the extent that you're approved for EIDL. Let's say you get a $10,000 EIDL loan, and then you're approved for $50,000 under the PPPL. You can either reduce your PPP to $40,000, so reduce it by the amount of the EIDL you got, or you have to refinance the EIDL into the PPP. So you can't have, you know, $50,000 in benefit from PPP and 10,000 from EIDL for 60,000 combined. You can only have a maximum of the 50,000. You have to reduce your benefit in one way or the other of the PPP for any EIDL you receive. So that's the Paycheck Protection Program. There is, if you do not qualify for, if you're not approved or you just don't apply for the PPP, there's another employee retention credit. So if you have employees and you don't go for the PPPL, you can do the employee retention credit. It's a little bit of a complex calculation I won't go into today, but just know that, you know, based on the taxes paid for employees, you can calculate an amount of a credit. It's up to $10,000 per employee based on up to $100,000 in earnings per employee annualized. And then that credit can be claimed against the employer's payroll taxes. Typically, it is just going to reduce the amount of payroll taxes the employer has to pay to the federal government. But to the extent that the credit exceeds the amount you have to pay in, you can actually request an advance refund of the excess credit in excess of the payroll taxes that are being paid in each month or after each payroll.
Hey, James, can I just
Yes.
Put in a question here? Because
Sure.
I see this one popping up. So since most of our clients are self-employed people, and you're saying that their income could conceivably be construed as wages, how would they be able to justify that for the PPL loan as a justifiable wage to compensate themselves?
So for the PPPL, it's going to be based off of net self-employment earnings. So after expenses, that net amount, probably what's on the Schedule C of your tax return, if you look at 2019, that's going to give you a good idea. The net amount after expenses, that's going to be your amount, your annual amount. For PPPL, you'll take that annual profit divided by 12, and then that gives you your average monthly net income from self-employment. Once you have that average monthly amount, you can multiply that by 2.5, and that'll give you your maximum loan amount. So let's say somebody that makes, you know, they have net income of $120,000 a year. Keep the math super simple. Let's say they have net income of $120,000 for 2019. Divide that by 12. You have $10,000. Multiply that average monthly income from self-employment of $10,000 times 2.5. That's going to give you $25,000, and that would be your maximum loan amount under PPPL. You would then have, once you receive that $25,000 loan, you have an 8-week window, and you can use that 8 weeks to pay your own earnings up to $100,000 annualized. And we haven't been given a good formula for calculating that yet under the 8-week window, but you can pay your own self-employment earnings in addition to rent, utilities, business rent, not personal stuff, but business rent, business utilities, and then business mortgage interest if you own a property. Those would all qualify during that 8-week window of forgiveness. The issue we're seeing with a lot of people we talk to is they're under mandatory shutdown, say your personal services business, and you're not allowed to be open. You're shut down right now, so you can't operate. You can't pay employees. Technically, you're not doing anything. Can you pay yourself? We're not certain about that. You know, what do you do if the 8-week period falls during a time when you're not operational? We're not certain on that yet. We don't know if you can still pay employees. We think it's going to reduce unemployment benefits. You know, we're just not clear yet on the forgiveness piece of that if you're not operational. All right, so that is, we talked about the Paycheck Protection Program, the Employee Retention Credit. Real quick, I'll touch on, you know, employer payroll taxes can be deferred as well right now. So not the employee deduction, not the employer's deduction of payroll taxes, but the employer portion, the additional amount that the business pays. Those can be deferred for 2 years, from April 1st through December 31st. Any employer payroll taxes can be deferred, half due in December 31st of 2021, and the other half due December 31st of 2022. We don't necessarily recommend that unless you really need that cash flow. I know I've seen, and I'm sure Lois and Anne, you've both seen, businesses get in trouble with payroll taxes, and it's very difficult to recover once you get behind on payroll taxes. So again, that's another thing. It's a benefit there where it can free up some cash flow maybe over the next couple months to get through this short run period, but it's not something we recommend, not paying your payroll taxes throughout the rest of this year, just because it's so difficult to get caught up on payroll taxes in most cases. So with the PPPL, another benefit of the PPPL is that you can add to the maximum loan amount for that payroll cost calculation. You can include retirement benefits that are paid by the business as a sole proprietor or by the business. And you can also include group health plans in that calculation. So those do go towards the maximum loan amount, again, based on the monthly average amount.
So would this include, if you're a sole proprietor and no employees and you pay for your own health insurance, would that be included in there as well? Or does it have to be a group plan?
I'm not 100% certain on that. That's one of the things we need to figure out. I think it can still be included if the business is paying for it. I'm not certain it has to be a group plan, but we need to check on that. So that was a lot of information in about a half an hour. So I know we've got a ton of questions. Roth IRA.
We've got 48 questions in the question and answer and about 40 other emails as well.
Okay. You want to start running through them?
Well, let's run through them backwards because the latest question is probably the latest topic you mean talking about.
Mm-hmm.
So, so for the PPPL, sole proprietor, would my Roth IRA contribution count towards retirement contribution?
Probably not, since it's an after-tax contribution. I'm not sure, but I haven't seen that included. I think it's going to just be, IRA. It's going to be qualified plans, either IRA or 401k or maybe simple.
For the EIDL, Economic Injury Disaster Loan, those that don't know what that means, or the PPPL, does your 2020 income have to be less than your 2019 income to be approved?
No, it's an interesting question because we thought that the Economic Injury Disaster Loan would require some proof of injury, and it does not. It's based off of, pretty much based off of 2019 numbers. For the case of rental property owners, it does ask for your reduction in rents that you've incurred due to coronavirus. So for rental properties, a piece of it may be, but for standard businesses, traditional businesses, you just give them your gross revenue and cost of goods sold, and that's about all that they ask for you in addition to headcount. And then for the PPPL, it's just based on either W-2 wages and those associated payroll costs or net earnings from self-employment. There's no certification of reduced working or revenue.
If you're self-employed with several entities, should you do a separate application for each?
If they are distinct and separate businesses, yes. So there's a few caveats to that. One is, any business that you're more than 20% owner of, you're going to have to disclose that those are affiliate businesses. So they do want to know. If you're let's say you're a rental property owner and you have 5 different properties and 5 different LLCs, and they're all single owner LLCs, you would only submit one application. You wouldn't submit, one for each individual property. You would submit one application based on your business as a rental property owner. Now, we are working with a lot of different clients where, let's say they own a salon So we have one business owner that owns a salon, and they also own an associated school that teaches maybe massage or some other skills. Those are two totally separate businesses. They're both corporations. Then in that case, each business would submit their own application, but they would have to disclose that they're affiliates because they have the same ownership.
If we're three-partner LLC with no employees, we do have 1099 contractors. We file 1065 and each receive Schedule K1. We also take monthly distributions as pay. We're getting conflicting information on whether we can apply for PP loan. If not, can we each file as sole proprietors?
Yeah, so the latest guidance that we've seen from the SBA is that you'll be able to apply as partners on Friday. I'm trying to get clarification as to whether does the partnership file or does each K1 owner file as self-employed. Not 100% sure on that one yet. We're working to get that answer. But you can file on Friday as for that self-employment income. There's been some confusion and some back and forth about whether you can include the 1099 subcontractors in your request for the PPPL program. So the latest guidance we've seen is that no, the subcontractors and 1099 subcontractors cannot be included, that you pay, cannot be included in your PPPL application because they can apply on their own. If I'm self-employed, if I'm a 1099 subcontractor, I can apply for the PPPL individually. So the person that pays me cannot also file for those same payments.
Makes sense. RE the EIDL, are you saying that if you qualify with less than 75,000 AGI, what will you receive some portion of up to 10K, which consists partially of a loan and partially a grant?
So the income limit of 75,000 that we were talking about, that goes back to the rebates for individuals. So yeah, if you're under 75,000 in income for adjusted gross income, you'll receive that rebate check. You should receive that rebate check. If they have your information, your bank information, that should be direct deposited. So that's one issue. The other is the EIDL, and the EIDL you can apply still based on your self-employment income. We don't know how that one's calculated. You can request that advance. Even self-employed business owners can request that advance up to $10,000. Again, we don't know how that's going to be calculated. It's supposed to be funded within 3 days of a loan officer receiving that preliminary application, but we haven't seen that yet, so we're not 100% clear on how that process is going to work.
When does the 8-week window start for the PPP loan?
We've been told that the 8-week window starts when the PPP loan is funded.
If you're self-employed and provide services, not material goods for sale, how would you suggest calculating the cost of goods sold?
So we've taken the tact that, if your tax return shows cost of goods sold, that's the amount we're going to include in cost of goods sold. And there's a lot of leeway in that, and we're trying to stick to more of an accounting definition of cost of goods sold. We're not using all total expenses, which I've heard. I don't think that's proper. I don't think that's accurate. And again, we don't know how the SBA is actually using the cost of goods sold to calculate the loans, whether it's a benefit or a negative. So we say, cost of goods sold is not business expenses. Cost of goods sold is typically direct production. A manufacturer has raw materials and labor production for cost of goods sold. A house flipper, if you're flipping homes, typically your cost of goods sold is the cost of the house that you're selling, and your revenue is the sale price. So we're sticking to a traditional definition of cost of goods sold.
How do you apply for the PPP program?
Good question. The PPP is being done through banks. We thought that the big banks were going to be the savior in this because they have big budgets for technology. They're going to be able to process a lot of these loans. That has not been the case at all. The big banks have been much more troublesome and difficult through this whole process. We've been able to get some through Bank of America, some through Chase. But what we've really found is if you have a relationship with a local bank or a relationship with a credit union, they're working really hard for their customers right now. And that's the route we've taken. We've tried to identify, local small banks for a lot of our clients to go through, especially the credit unions have been super that we've worked with so far in getting these through underwriting. They don't always have a technology platform like Bank of America has, but we've gotten, I think, more through local banks than we have the big national banks. So you want to look at your banking relationships. That's where I would start, and then see what their process is for submitting these loans. Where we're assisting is, the preliminary applications are pretty straightforward. So you want to get that process started as soon as possible. But then there's going to be a document package that needs to go to the underwriting department along with the PPP application or soon thereafter. And then, once it's funded, at the end of that 8-week window, there's going to be an audit requirement. So we're going to need to do calculations, collect more documentation, and substantiate those amounts that are going to be forgiven. So that's going to be part of that process as well.
Can you correct any of these documents, like an EIDL, once they're submitted?
You could correct it once it gets to the loan underwriter, correct or clarify, because they'll email you. The loan underwriter should email you, so you could let them know if there's an error. But it's not the old application used to be able to log back in and you can make changes. The new application, you can't make any changes to it once it's submitted.
Okay, regarding SBA PPP, we are an LLC that pays as a distribution, and our bank was unsure if that was considered payroll for the paperwork.
Yeah, for the loans that are opening up Friday, they are, net self-employment is basis for the PPPL.
As a sole proprietor, should you first run out your unemployment benefit and then apply for SBA loan?
Well, I think the unemployment benefits are going to last longer than the PPP program may be available. So I wasn't a huge proponent of being one of the first ones to apply for the PPP, but I think at this point I would get in there and get that application because it may not last terribly long, even with the new funding.
Lauren's asking here, sole proprietor here. I applied for a PPP loan. I am 50% owner of the building I work in, held by an LLC company. Do I need to declare this as an affiliate business?
I think you want to declare it as an affiliate and submit a combined application for the two, since you own the building and run your business out of that building.
For workers coming off unemployment or have been unemployed for a year, can you reapply given the circumstances?
I am not 100% sure, but I think you can because there's extended and increased benefits now.
I'm self-employed but don't take a salary. Will I still qualify?
Possibly. So that's where we're going to have to look at your self-employment earnings. Although you may not physically take that money or take that cash out of the bank, you may or may not have self-employment earnings. A lot of times we can look at the tax return, if you filed your 2019 tax return, we can look at your Schedule C and see, was there income there or not? If there is, then that would be the basis for the PPPL calculation.
A lot of similar questions here.
Yeah.
I'm
seeing a few recent ones coming through about the $10,000 grant piece.
right.
Can I go back and address
go
that?
ahead, absolutely.
Yeah, so with the EIDL is the loan, the economic injury disaster loan that's applied directly through the SBA. That's the one that has the up to $10,000 grant piece to it. The SBA's changed their language from grant to advance. So again, we don't know if you apply for the EIDL, let's say you get the full $10,000 advance that they're talking about. We're not certain whether that rolls into the loan. We think that rolls into the loan. If you get a $50,000 EIDL and you were given a $10,000 grant, we think that your funding of the EIDL is going to be $40,000. So that it'll be the $40,000 remaining loan funding plus the $10,000 you initially received, and that'll give you a $50,000 total loan. We think where the grant nomenclature came from is, if you apply for the EIDL, you can get up to $10,000 advance to you if you don't close on the EIDL, or if you don't qualify for it. Any money that you were advanced, then it becomes a grant. You don't have to pay that money back. There's no requirement for paying that money back. So that's kind of the grant piece of that. We're just not 100% certain because we haven't seen them yet. We're still pretty early in the process and the loan approval process, where we haven't seen those. The one client that I do have that has been approved and is closing on the EIDL, she didn't request the advance piece, so we don't know how that's going to work with her. So we're just waiting, to see things go through the process, and then we'll have a lot better idea on some of those things. All right.
Someone was asking here, do you know anybody who's actually got that 10,000 from the SBA yet?
Yeah, I don't have anybody yet that's actually received the money. I think it's coming soon. Things are moving along. I think those are coming soon, but I haven't seen anybody actually receive it yet.
Okay, this was from Matt.
Didn't they say that it would be arriving within about 3 weeks from when the program started? And the program isn't that old.
Yeah, it's not that old. It's only, a little over 2 weeks old where the applications have gone in. They said that, you should have that money within 3 days of it being assigned to a loan officer. And then they said, it could take 3 weeks to be assigned to a loan officer. But I've seen a couple of them now assigned to loan officers in 2 weeks. So, we're getting to that point where the program is rolling past 3 weeks. We're getting close to that 3 week mark. So that's why I think, maybe later this week, but definitely next week, we should start seeing some of those advances getting funded.
Matt was asking, I'm self-employed and my wife is fully employed, so we're wondering how we can take advantage.
Even if she is still employed and working, you can still apply for the PPPL as self-employed. So you can still apply for that. You can still apply for unemployment. If you have reduced income or no income coming in right now, you'd still qualify for unemployment, and then definitely the PPPL. And you can also apply for the EIDL. So all of those would still be available to you as self-employed, even if your spouse is working.
Trish was asking.
I'm sorry.
Go ahead.
I have a question here. Someone said, I'm a hair salon owner with no employees, but stylists rent chairs, and then they're self-employed, and they can't work now and can't pay their rent. What do I apply for?
That's a good question. The way it's set up, and the guidance we have now is I didn't hear a name, but the person that asked that question, they can file for both unemployment. They can also apply for the EIDL. And they can you'd apply for the EIDL based on the gross revenue of the salon. The PPPL, you can apply for that, but your application to the PPP is going to be based on your net income from self-employment. So just your self-employment. There's a lot of confusion. A lot of people were told, myself included, that you could also apply for PPP based on money you pay to 1099 contractors. That's not the case. You can't do that because each of those 1099 contractors are able to apply for their own unemployment. They're able to apply for their own PPPL. So, hopefully they're organized and have tax returns, or at least financials, where I can put those together so that they can apply for the PPPL. It went back and forth, but there were issues with double dipping, where they were trying to avoid double dipping and having to pay out, double on the same people. So they've eliminated 1099 contractors that, like me as a business, me as a salon owner, I can't claim benefits for the 1099 workers, subcontractors, but they can go claim those benefits.
Mm-hmm. I have another question here. I'm selling a rental property and have been planning to do a 1031 exchange. Finding an exchange property has proven to be challenging at this time. Do you expect the IRS to extend the 45-day identification window?
I hope so. You know, the AICPA has asked the IRS to extend that window. We haven't heard anything yet. I know there's supposed to be additional guidance released maybe today by the IRS. I don't know if that's going to be something included or not. It's just not a pressing issue right now. Like for your client there, it's probably a very pressing issue. But for the IRS and in the realm of everything else, it's not the most pressing. But we do need guidance on that. You know, it would be very difficult to exchange a property. We've gotten extensions on all the other tax deadlines. I think it would be appropriate to extend that that window for a 1031 exchange, but I haven't heard anything yet.
Okay.
Trisha was asking, I'm self-employed massage therapist in practice since '92. I use a Schedule C when I do my taxes. I do not have a business account. Can I still apply for PPP or any other resources?
It's going to depend on the bank, unfortunately. So I would definitely apply for EIDL, and you can also apply for unemployment because you're self-employed, so you can still apply for both of those. Self-employed is an allowable business structure for the economic injury disaster loan. So you can apply for the EIDL on the SBA website. You can also apply for unemployment. The PPP you can also apply for. The problem is it's done through the banks. And the issues we're having with the banks is that Congress stated certain rules for the PPP and told the banks this is what you're going to do and this is how you're going to fund it through the SBA. The problem is some of those rules are in conflict with the Dodd-Frank Act, which is another law passed from the 2008 crisis that told banks that they have to meet certain criteria for underwriting. So the banks are now caught in this place where they can't go against Dodd-Frank and they can't go against the CARES Act, so they can't break the law in either case. So how do they get through this? So they've adopted rules. And we saw Bank of America was the first one to do this, where to be able to apply for the PPP at Bank of America, they were requiring that you have both a business checking account and either a business credit card, business loan, or business line of credit. So that severely limited the number of people that could apply through Bank of America. Most banks are only doing these for existing customers. So what I would recommend is reach out to your bank or log on to their website and see what programs they have, how you can apply. Again, if you have a relationship with a local credit union or a local bank, we're finding them much more responsive. The loan officers are much more helpful. The underwriting departments are much more accommodating. So if you can work with a local credit union or a local bank that you have a relationship with, I would reach out to them. If you just have an individual account with Bank of America, that might be tough to get it done. Unfortunately, it's just bank by bank and the rules that they're setting right now.
That probably plays into a question from Monty Stott. He was asking, engineering business with many employees, banking with Wells Fargo. On Saturday, filled out the information on the website for the PPP, and then Monday, Wells emailed him saying you're in a queue based upon when you submitted your interest. Additionally, they said you may want to apply elsewhere to increase your chances of receiving a loan. So his question is, should I stick with Wells or maybe start looking elsewhere? And a lot of people are having the same question, the same problem.
Yeah. Wells Fargo is an interesting case. They're a little different from the other issues we're seeing. Wells Fargo got caught adding fake bank accounts, and they were penalized for that, and they had lending restrictions placed on them. So they're running into their lending restriction limits because of the PPP loan program right now. The talk is that they are going to be, the Fed and the Treasury are going to release them from those restrictions right now so they can start accepting PPP applications again. I don't know, that may have happened today. My understanding is that was going to happen today so that Chase could start accepting applications again. I know they've been overwhelmed with applications. If you have another banking relationship, I would submit another pre-application. Obviously, you don't want to submit 2 applications to the SBA. They won't let you do that, but you can put in 2 pre-applications, and those are that's what you put in with Chase or Wells Fargo right now. That's what you put in with them. You can put that in with another bank. Just don't go through the underwriting process with 2 banks. Only choose one that you're going to actually move forward with. And that would be the first one that responded to me and said they're ready to move forward.
Right. Well, it's a pretty lengthy question. Do you have anything pressing, ladies? I've got a lengthy one there.
Well, at some point, I want to save some time for landlords and tenants.
Do we have any specific questions coming through for landlords and tenants right now?
Well,
I know.
Well, I have one client who recently moved to a different state, but she bought a house with an in-law unit, and her tenant just gave notice for leaving next month. Obviously, rental income is going to go down. It's going to be difficult to find a replacement for that tenant. What should she apply for?
I would apply for the economic injury disaster loan, and there's no guidance on the loss from rental income where you put that amount in. In that case, I would look at projected loss of rents. And maybe we say, you know, okay, I've lost this tenant. It's probably going to take me 6 months to get a tenant back in place. So I have economic injury of 6 months of rent for that unit, and use that in that cell for the EIDL application.
So there's a spot on the application to indicate what the damage was?
Yes.
Okay.
Yeah, I think it's called lost rents or loss of rental income, where you can specify that.
What other scenarios would you have for rentals?
Well,
I guess a lot of the majority, a big chunk of people are not going to want to pay. They pay the rent.
Sure. Go ahead, Jan.
Can I just talk about a new ruling that just came down from California on Monday?
Yes, please.
This is really important. Sorry, everybody, but first of all, thanks for joining us. It's really nice that you're here. And I hope this is informative for everybody. And thanks, James, for what you're providing too. I want to make people aware, because I attended a webinar yesterday put on by the Apartment Owners Association. And I first of all need to say I'm not an attorney, but a lot of the information that I'm providing came from an attorney who presented on the seminar. It turns out that on Monday, the Judicial Council changed some of the laws. This has been bandied about in Oakland in recent weeks, but it became state law in California. Up until this time, it's been understood that if you were impacted by the COVID-19 virus, either because you were sick or caring for somebody that was sick, or if you were furloughed or laid off, that you could have your rent deferred. And that's true. I think any understanding landlord would be amenable to working with tenants who are in good standing who would have wanted to ask for a deferment. But the change in the law that happened on Monday said that at this point, landlords are not allowed to evict tenants for anything other than safety and health concerns. So this is going to be an important consideration both for landlords and for tenants. Now, what it does not mean, and I want to first of all emphasize there are a lot of good and moral people out there who, if they can pay their rent, are going to be able to do so and will do so. But there are likely to be some who want to abuse this, this new ruling. So what tenants need to understand is that they are under a binding contract to pay their rent. What they do have right now is this disincentivizing rule that says that they don't have to. It's like saying we're posting a speed limit of 65 miles an hour, but we're not going to give a ticket. So that gives people a license in many ways to say, oh, let's go 85, 95, 100 miles an hour. So that's a potential recipe for disaster because no enforcement could equal no rents. And landlords do not have recourse to evict tenants who don't pay rents, even if they have the wherewithal to do so. So I think it's important for landlords to understand that you need to open up a dialogue with tenants. First of all, I think from a human point of view, ask them if they're sick or if they have been if they've lost their jobs or they're furloughed, if they have an economic problem and can't do it, and try and work with them. And in turn, I think that this will strengthen your claim with the EIDL to be able to come back and say, look, I couldn't make my mortgage payment. I had loss of rent. I couldn't pay for utilities or home maintenance and things like that. The point being that you could get the EIDL because rent is a form of wages to a landlord. And I think that that's what helps you to qualify for this. And you may not have employees because you're the one who's running your business, but you can get some extension on the benefits. The other thing is that I've seen a couple of questions about deferring mortgage payments. I think that there are like 3,000 lenders, from what I've understood, who are willing to work with people who have mortgages, not only for their personal residence, but also to landlords who have mortgages. The preferred thing to do would be to say, okay, look, I'm likely going to miss 3 months of payments. Will you simply extend those payments to the back of my loan? So if I have 300 months left to pay, now I have 303 months to pay. That would be the preferred way to handle that. But my concern is that the lenders are going to say, okay, you missed 3 months, we'll give you that. We won't charge interest and penalties, but we're going to tack those payments onto the back of the principal, on top of the principal, which means you're going to be paying interest on interest, which is not going to be very good because it compounds pretty rapidly. The other thing is that this edict that came into play is for an unknown period of time, but there is an extension of this that it goes to the tenants where landlords cannot act for 90 days after this emergency edict or the emergency situation has been lifted by Gavin Newsom. So we may miss like April, May rent, and then have another 90 days before you can even consider evicting a tenant for abusing the privilege of deferring rather than paying their rents. So I want to just say that, you know, this isn't necessarily a totally negative thing. Again, people have been impacted by this virus and staying at home and not being able to work. Some people are sick, and my heart goes out to those people for sure. But what can landlords do? Again, like I mentioned before, I think it's important that you open up the dialogue with your tenants, find out where they are, what they can do. If you can offer them some leniency and they have need, do it. If you can say, look, I will let you skip these months, but can we set up a payment period where, okay, if your rent is $2,000, can you make it up over the next 2 years by adding $200 more to your rent to make up for that loss? That would be a good way to handle that. Or a lot of landlords, I heard one saying, I'm going to forgive you your rent for April. That's a very generous offer. Others are saying, let's forego half a month's rent. Let's make it a little bit easier. But, you know, people are pretty good. But there are a couple other things that you need to bear in mind here. If someone doesn't pay their rent and they are abusing it, as a landlord, what you can't do is you cannot lock out a tenant. You can't shut off utilities, and you have to maintain the house and make necessary repairs. Roommates or tenants who have roommates, and let's say one of them is not working, both of you are responsible for paying the rent, even if one isn't doing their fair share. Again, you have to remember you're in contract and it is binding. So let's see, other things to remember is that you can only evict somebody for safety and health reasons. If you have a current vacancy, you can certainly rent your place, but be sure to check not only current landlords, but previous landlords before that about the quality of the tenants that you're renting to. try and maybe get a bigger security deposit. There was also a question, I think, about property tax, whether property tax needed to be paid at this time. It's due April 10th. So as I understand it, having heard from Phil Mateer on the radio the other day, currently the county offices are officially closed. And as such, the requirement is that, as an example, if the 10th were to wind up on a Saturday, that means the offices are closed. Therefore, your payment for property taxes won't be due until Monday. Well, at this point, the county offices are officially closed until May 3rd. So that gives you, in principle, based on that, I guess that sort of thinking, is that you have until maybe May 3rd to make your property tax payments, and you may not have an issue with late fees and penalties. I can't say that for sure, but that's what I heard on the radio the other day. So ultimately, I think the goal here is to try and find ways to work with your tenants. If you have them, if you're a tenant, then work with your landlord. This has got to be a win-win for everybody. Be sure to talk and find ways of finding solutions. Be honest about the stuff. If you have room to help a little, do it. If you have the latitude to give a little extra time, do it. Ultimately, we want to do the right thing and use the CARES Act so that it can help as many people as possible. So that's really about the gist of what I wanted to say, and hopefully that's helpful. And James, oh, I'm going to just say one other thing. I'm going to put a plug in for you. I'm going to go back to my days as a young whippersnapper, as a landlord. And back then, I had a situation where I had to evict somebody. And I was a do-it-yourselfer. I thought that I could handle this my way and all of that. Turns out I missed a lot of T's that I didn't cross, a lot of I's that I didn't dot. As a result, the tenants wound up staying in the property for an extra 6 months. And, you know, I wasted a lot of time. I lost a lot of benefit. And I ultimately wound up what I should have done from the beginning, and that was hire an expert to help me with the eviction. And I'm just going to say that Lois and I have decided to hire James because he's the expert in handling a lot of this stuff. We have a complicating situation. Many of you have probably easier situations and can do it yourself, but you might be missing opportunities. So I'm just going to encourage you, if you, again, there's no cost or obligation. This is an informative seminar, but I also want to say that if you want to have an advocate on your side, James might be a resource for you to use to get the optimal benefit that the program allows. And one last thing is that I think that there's some talk that the funding is drying up that was originally provided. We are hearing that there's going to be additional funding that's coming up, sort of a second round here. And so James might be able to talk more to that. And again, I'll toss it back to you. Thanks so much.
Sure. Thank you. I appreciate your words and endorsement. And we work very hard for our clients to get you guys the maximum benefit we can. I think your advice for landlords of communicating, I think that's always a good good advice. In my younger days, I might have ignored things, and that always works out worse in the long run, where if you're proactive and you communicate and you engage your tenants, I think that'll be much more productive and help both of you in that process. So I think that's great. I did see a question come through whether the advice is the same for commercial. I think that whether it's residential, multifamily, commercial, and you would say that's the same process, right?
Yeah, I forgot to mention that this new edict with respect to landlords being unable to evict tenants for the ensuing months, this not only applies to residential properties, it also applies to commercial properties. So those of you who may have any interest in that need to be aware of that, because again, a lot of retail establishments, businesses have been impacted, and they're going to need some forgiveness or some help. So be aware that you cannot evict those tenants who are in your commercial endeavors.
Good. Very, very good, helpful information. Craig, do you have other questions we want to roll into?
There's rolling in all the time. I've got so many emails and lots popping up in the chat and the Q&A. Absolutely. It's a question of, I think a lot of them are definitely within similar sort of buckets. Is there any other scenarios that would be helpful to play out? When you played out a realtor landlord scenario, played out a self-employed scenario. Are there any other scenarios?
Let me look through that one again one more time. So let's say, you know, I'm self-employed. Maybe, you know, I'm a consultant. Maybe I'm a software developer and I subcontract to Google or another company. Maybe I'm a salon owner we talked about earlier where I'm self-employed. Maybe I have some people that I subcontract under me too, but you know, my business is me. You know, my business consists around me and the work that I do. So in that case, you know, what do I want to do? Like right now, if I haven't done anything and I'm shut down, I'm partially shut down, I need some help here, what would I do if I'm self-employed? The first thing I would do is file for unemployment. And we know, you know, that may be we may need to check in onto California's website, you know, every day until that's up to speed. But I want to keep a really close eye on unemployment and file for unemployment as self-employed as soon as I can. I also want to go to the SBA website, the coronavirus website for the SBA, and apply, put in that pre-application for the economic injury disaster loan, whether I'm a landlord, whether I'm a salon owner, whether I'm a consultant or software developer. I want to go to that SBA website and submit the pre-application for the economic injury disaster loan. When I do that, I want to make sure I request that up to $10,000 advance. That's the grant we were talking about, but when I'm doing that pre-application, it's an easy box to miss. It's just in the middle of, I think, page 3 is just a little checkbox. You want to make sure you check that because I've had clients miss that box and they didn't request that advance. So I know they're not getting it. So make sure you request that up to $10,000 advance when you submit the EIDL pre-application. Next, if you're self-employed, start getting ready for Friday. Friday is when the PPP loan application opens up for self-employed individuals. You know, get ready for that. You can download the application off of the SBA's website for that. You can start putting together, get your tax return together, look at the other documents. You're also going to need like a driver's license, some simple documents that you have, but you'll need copies that you can upload to your bank. And in addition to getting ready for Friday, I would, you know, if you have a local bank or a relationship with a banker, reach out to them, call them, shoot them an email. Email tends to work better because they're all, they're swamped right now, but shoot them an email and say, hey, you know, I want to apply for this on Friday. What's your process? You know, what's the Oakland Federal Credit Union? What's your process for accepting PPP applications on Friday? So you know, and then Friday morning, 8 o'clock Friday morning, you're ready to go. You're ready to do the pre-application and submit documents. So that's kind of the steps of what I would do if I'm self-employed right now to start getting some relief and getting some help. So hopefully that helps. I've seen a lot of questions kind of around that whole area. So hopefully that helps kind of like what are the steps I would take to get some help there.
And James, what if you have multiple streams of income? Like I see a friend of mine there, Sue, hi Sue, who has a full-time job, but she also has a job as a tennis pro. And, you know, so can she get the unemployment or the grant because of her self-employment as a pro has been impacted?
Sure, so that's a good question. The unemployment, you know, is going to depend on the reduction in employment. So to the extent that she's a tennis pro on the side and she still has her full-time W-2 income, that won't be impacted. So she won't receive unemployment for that piece. But let's say she normally does $20,000 after expenses in a year from tennis instruction, then, and she, you know, is only expecting $10,000 now, she could apply based on that reduced employment. And then she could also, again, apply for the EIDL and the PPP based on that self-employment income.
Okay. And the same thing would apply for landlords if they have a regular job and then they have loss of rent, they'd still be able to apply even though they still have a job.
Yeah, landlords are an interesting situation, and it depends on to what level they rise to. So, you know, like your typical full-time, let's say I work for full-time for someone, I have W-2 income. I have a half a dozen rentals over here that I also manage on the side, and I collect rents on those. They would be eligible for the EIDL. The problem is, I'm sure you see this a lot, they don't have net income because the depreciation combined with the leverage eliminates their net income. So they're not going to qualify for unemployment because there's no loss of net income, and they wouldn't qualify for the PPPL because typically they wouldn't have net income. Now, if they're a bigger organization where maybe they have a management corporation in addition to the rental properties and they're drawing a salary, and rents are down and they can't pay salaries, that would be a little different situation. But your average landlord that has maybe a multifamily or two, or maybe some a handful of residential rentals, that's not going to apply to them because typically they're not going to have net income to show to substantiate the other programs, just the EIDL for loss of rents.
What if they do have net income?
Then that would qualify. That would qualify as a business enterprise.
So then they could apply for the EIDL as well as the PPPL?
They could apply for the PPPL in addition to the EIDL, yeah. Regardless of their income, their net income, they could apply for the EIDL, but the PPPL for self-employed is going to be based on their net income from self-employment.
Okay.
Well, have you got any more questions?
Let's see.
I know there's a lot. There's a lot of questions, as anybody who's on this call can clearly see, because James and I have done a few of these now. Everybody's circumstance is very different. You know, when you start peeling back the layers of the onion to everybody's individual circumstance and business structure, and whether they've got W-2s, 1099, everybody's so different that often you do need to get some professional advice. That's why James can coach you through this. Can I just share those programs, ladies, with your viewers? If I just share, because there's two, let me just share, and then we'll take some more questions. But I know if I just share the screen, because this is the link I'm going to send everybody to get all the resources. If I just share the screen, because it doesn't stop at this call, you will get access to a lot more things. So check your emails afterwards. But if I just share this screen, can you see this?
It's black. Oh.
We see the website now, the replay.
Yeah, you
website.
see the website. Okay, so I'm going to be sending everybody to this site after the event, and I will put the replay. There's some other videos up there on other sessions that we've done, and I will add this session as well. But if you navigate to the bottom, you'll see this view the playbook. So if you check this, it will ask you to fill out a form, and it will then take you to the playbook. So you have access to what we call the resource guide playbook. It's got all the links in there for local, state, city, unemployment, and James keeps that up to date with all the links, those comparison charts, the SBA links, how you go about the EIDL, where you apply, etc., etc. So that is the resource book. And I find there's two camps of people. There's a camp of people who want to navigate and do this themselves, which they would go to the resource playbook and look through the resources through there and do it themselves. Unfortunately, because the volume of questions that there are, if you want to engage James, and then click on here, your next step to engage James or work with James, if you click on the Learn More button here, you will be taken to this page, because there's a number of different programs that James has available, and you can see them clearly on this page. There's a relief lending program, CARES Act program, and the COVID-19 forecast, and you can see the different pricing structures here. So if you want to engage and work with James and have James coach you through this process, then he will get on a call with you. Just fill out this, yes, I need you to do it for me. And then you fill out this form here, and you will then get onto James's calendar, and James's office will call you to discuss your particular circumstances. See firstly if James's office can help you. If so, you can move forward. If not, then James will let you know. Is that fair to say that, James?
Yes.
Okay. All right. So just wanted to share that. So remember to, I will be sending out the link for those that want the link. I'm not sure if you can see it right up at the top there. It's Rainwater CPA.replay. I will put it into the chat box, but it will be going out as an email as well, so people will be able to access that. How long you got, James? How much longer you got?
I'm good for a little bit here.
Okay.
Let's see. I see Alice has a question. Hi, Alice. She's still unclear about gross revenue. Psychotherapist as her practice. And no, there's no cost of goods sold for psychotherapists, but I guess the EIDL is what she's questioning, how to use the gross income.
Sure. Yeah, the EIDL and the PPP are a little different in that the EIDL asks for your gross revenue. So those are going to be your total sales for 2019, or your gross fees, the total fees charged to clients for 2019. Again, if you have your tax return for 2019 prepared, you'll look at your Schedule C, and you'll see, the gross sales at the top of that Schedule C. That's going to be the amount that you put on the EIDL. You're not going to have cost of goods sold for a therapy office, so that would just be zero. You'd put zero in there, and that's okay. Again, we don't know exactly how they're using that calculation, and I think that the SBA knows that a therapy office isn't going to have cost of goods sold. That they're mostly going to be office and operating expenses below the gross revenue. For the PPP, it's a little different. We're not using gross revenue. We're using the net or the net profit from self-employment, or the net earnings from self-employment. So that's going to be the number at the bottom of the Schedule C after all the expenses, the net income or the net profit. That's going to be the number that we use from 2019. Whatever that net is after expenses, we're going to divide that by 12 to see the average monthly net earnings from self-employment. Multiply the average monthly times 2.5, which is just a number they put into the legislation. You multiply the average monthly times 2.5, and that's going to be your maximum loan amount. Plus, a few specific items like health insurance and retirement payments. Again, monthly.
James, regarding that, if they're putting in a contribution, let's say to a solo 401k, and is that going to impact that net profit number?
So
this is for a sole proprietor, Schedule C.
Yeah. So for a sole proprietor, I think it's going to be the combination of the total amount that's being put in. Well, let's say they decide to put $24,000 into a solo 401k between the safe harbor and their individual contribution. So $24,000, we would take that total amount. The average monthly would be $2,000. So we would add that to their average monthly self-employment earnings. We're getting a little bit in the weeds on the calculation, but we wouldn't take the full 24,000. We would say, even if they made that payment in December or January, what is the average monthly amount of that contribution to add in to get to the maximum loan calculation.
Okay. Now, if their net profit exceeds 100,000, is there a limitation?
Yes.
On how much you can...
Yeah, they are limited to 100,000 annualized. So, an average of 8,300 a month, roughly.
Okay.
Oh, and the $100,000 limitation does not include retirement and health insurance. So it's their net self-employment earnings up to 100,000, and then you can add the average monthly health insurance and retirement on top of that.
Okay, got it.
I'm going back to the top of some of the questions, and one of them was about Airbnb hosts. Are they eligible for the EIDL?
Yes. Definitely.
Okay. Oh.
Some
And-
Airbnb hosts, especially ones that operate, with additional services in addition to just the short-term rental, some of them I'm sure you've seen are on Schedule C. So they would, to the extent they have net income, they could qualify for the PPPL in addition to the EIDL.
Now, quite a number of questions. I see one of the last ones on here was asking if you don't have 2019 prepared, can you use 2018? A lot of people ask, what do I need to really have prepared? What ducks, so usually say, well, you got to have your ducks in a row. What do they have to really have prepared to apply for these loans?
So it's different. The EIDL and the PPP is different. And for the PPP, it's a little bit different by bank. I actually have a list open for a bank we're working on right now for the PPP. They want to see, as part of the initial loan package, the initial loan application, they want to have their application. So they want to see the completed application for the PPP. They want to see, for someone that has employees, they want to see the 941s, your Form 941 for each quarter. They want to see a payroll report with a listing of employees. They want to see any documentation you have on health insurance, retirement, and other benefit costs. So maybe a monthly bill for your health insurance, or payroll reports that show retirement contributions. They want to see copies of existing leases and loans. They want to see the articles of incorporation for your business or your LLC, a copy of a business license if you have it, the validation of the tax ID number. So if you have that, I forget the form number, but the letter from the IRS confirming your tax ID number, they want to see that if you have it. And then a copy of the driver's license for any owner or self-employed person. So, so those are going to be, that's kind of the list of documents they want to see with the PPP. For someone that's self-employed, doesn't have payroll, you're not going to have the 941s or a payroll listing. I think they're going to want to see tax returns. If you only have 2018 tax returns, they can't, the deadlines have been extended to July 15th, so they can't really make you prepare your tax return, but they're going to want to see financial statements. And this is where, it's really important to have clean, completed financial statements for 2019 if you don't have the tax returns. So I think they're going to want to have, one or the other to be able to get the loan through underwriting, either the 2019 completed tax return or, financial statements that you can provide. And I don't think, I do, we all know people that kind of have, some expenses here and some expenses in Excel and some, the revenues all in the bank account. I don't think that's going to be sufficient for the banks. I think they're going to want to see an actual, statement of profit and loss that they can look at and refer to for the year.
Are they going to want the profit and loss for this year as well?
Possibly, but I haven't seen that requested yet. It is possible they may want it at least through February or March, but I haven't seen that in a request yet.
Mm-hmm.
There was an interesting question that came on early on, and I don't know as any of us have the answer to it, but apparently somebody has disability insurance. And even though they weren't actually injured, their business has been injured and effectively disabled. Do you know of any ways that somebody can take advantage of their disability insurance to fund what they need?
So I've had some conversations with people in the insurance industry. And it's been about 2 weeks ago. So, everything is changing rapidly. So 2 weeks ago was a very long time ago to rely on the information. But the conversations we had at the time was that insurance companies are not covering this at all. Disability, they would have rules, I think, if you're actually sick from COVID, that may kick in. But the fact that the business is injured or you have loss of revenue, I don't think it would be covered. Even businesses that have business interruption insurance, from what I've heard, most carriers are not covering even the rider for business interruption insurance, even though clearly our businesses have been interrupted. You know, there's state mandates that they be shut down and be interrupted, but the carriers are saying that these are not qualifying events for business interruption, that, you know, a state mandate is outside of the policies. So that may have changed by now. You know, that may change again when legislatures, the state and the federal legislatures, find out that insurance companies are not paying claims on these policies. But
don't rely on the insurance companies, eh?
right, yeah, that's not a great source right now for help.
Someone was asking here, sorry, just based upon that same question, if you've not got 2018, can you use 2017?
I don't know. That's kind of old. You know, they're gonna want to see some verification that you're still in business. Maybe, you know, if you have separate bank accounts for the business, they'll look at those. But you got to remember, especially with the PPBL, these are going through banks, and they're subject to underwriting rules under the Dodd-Frank Act. So, and they're being very conservative from what we've seen so far to stay out of trouble with Dodd-Frank. So, you know, I don't know that they would be willing to underwrite a loan, even though it's 100% backed by the SBA. I don't know that they would be willing to underwrite a loan based on information that is 2 years old.
Mm-hmm.
There were other questions about getting the $500 per child. Can you outline some of the rules related to that?
That should be automatic as well. The interesting, I don't understand why, but Congress stipulated that it's per qualifying child. So a qualifying child, and we've had a lot of questions on this, a lot of confusion. A qualifying child is a child that lives with you under the age of 17. So, you know, to the extent that you have a child that lives with you and they're your dependent, they're under 17 years old. Basically, they qualify for the child tax credit. Then they would also qualify for this rebate credit. Unfortunately, my children are 19 and 21, and one's a full-time college student, so I don't get a $500 check for them. This college student, I don't think he gets one, but I think my older son would get a $1,200. He qualifies for a $1,200 rebate check personally, even though he's still kind of technically my dependent. So it's kind of odd the way it was written, but that's what we're stuck with for now.
The qualifying child would track to whoever claimed that child as a dependent. Would that be correct?
I'm sorry? One more time.
The child credit, the $500 would track to whichever parent claimed that child, if that child was under 17.
Correct. Yeah. So if you know, and if both parents have filed, you know, in the case of like a separation, if both have filed 2019, it's going to be based on whoever claimed that child in 2019. Will get that
based
benefit.
on their income.
Right, and based on their income, on the parent's income. Yeah, the child shouldn't. There was originally a rule that you had to have at least $2,500 in earned income to qualify for the credit. That was removed. That's no longer a rule. So you don't have to have earned income to qualify for the rebate check. All right.
Right. Well.
Okay. Well, I know we got this. You've got a busy crowd. I must honestly say, we've done a few of these recently. It is a complex subject. The questions are coming in and all the time.
I don't know that we can get to them all.
There's a tremendous amount. Hopefully, by watching this replay a lot and the scenarios that James played out, will hopefully help with the majority of the questions. As you know, the only thing that accountants, lawyers, people like yourself have to sell is time. It is very difficult to get to the volume of emails and questions people are asking. But hopefully, this was valuable to your group and friends and clients. But as I will be sending out an email follow-up to everybody who can access the resource guide, and if you want to get on the phone and engage James's company and coach you through this, then you'll be able to see the fees associated with that and be able to sign up for that.
You'll be sending out a copy of this event today as well.
And this replay of this video will be on the same page. Yes, you'll be able to access this to replay, the resource guide for all those people that want to try and do it themselves. And it's pretty, and it's outlined with all those comparison charts and all the links that will be very helpful to everybody and hopefully answer more questions. And then for those that are in the camp that want James to help do it for them, like you did yourselves, then you can engage with James and get him and his team to do it for you.
Great.
Yeah.
Well, we want to really thank you guys for your presentation today. It's been awesome. And I know there's lots more questions to be answered, but if people listen to the replay, I think that a lot of them will get answered. And I want to remind you that we're here at Financial Fitness Center to, help you with tax preparation and tax planning. So when you're doing that loan application, if you have any questions about what your numbers need to be or what you had on your past tax return, give us a call. We're here to help you. And if any of you have complex situations, do consider engaging James in the process.
You sound on that note, Lois. It seems to me, looking at a lot of people, they're way behind with their taxes. They've not done the 2019s. A lot have not done the 2018s. I think you're going to be rather busy.
I think so. I think so. I think so.
Because you got to get up. You got to get straight before you can then start applying.
That's right. That's right.
It's very important.
Well,
Yeah, it's good to have
and
that
I want
set
to
ducks in a row. Right.
And I do want to thank my tax clients who have been patient, because we've been fielding a lot of questions about this topic and many others as people have been concerned about the financial impact. So as a result, a lot of work has been sort of slowed down because of that. But for some, it may be helpful because they can rely on their 2018 returns and base their stimulus money based on that income. If you need us to file sooner in 19, give us a ping so that if your income was lowered and it helps you qualify for more, we can try and get that out faster. But I mean, honestly, we have the best clients in the world, and we're so grateful and appreciative of you. And thank you for your interest in joining this seminar. And James and Craig, you guys have been awesome, and we're looking forward to working with you. So really an informative time.
Likewise. Thank
Well,
you very much.
thank you, Liza. Just a side note. Let me just say one thing. I'm into the thousands of webinars that I've done personally because I come from the marketing background. We usually look at two metrics, which is how many people registered for the event and how many people actually showed up. Typically, your average show rate under normal circumstances, 20–30% of people who registered actually show up for an event. I must honestly say that your numbers of people who registered to people who actually turned up must be nearly 100%. So, okay, yes, it's very timely because of the circumstance and this unprecedented times that we're in, but to nearly have literally 100% of people registered turn up is quite phenomenal. So I encourage you ladies, now you're doing these Zoom calls, and I wish I had shares in Zoom, to be quite honest, because the amount of people that must be signing up for Zoom to do these virtual events must be outrageous. But I encourage you to do more of these to your clients, to train them, educate them, etc., etc.
Great.
That's a great idea.
I hope you're going to do that. I hope you're going to do that.
We will be doing that.
Yeah.
Okay.
I would do. Okay.
Okay.
Great.
All right.
Great.
Everybody,
Thanks, everybody.
Stay
Thank
healthy.
you.
Let's get through this time. Pay attention. Just because the numbers are flattening out doesn't mean you should go out and get wild now. This is the time when we still need to be careful. Next 3 weeks are really important about that. We want to keep you safe. We want to help you. And we so appreciate and love you. Thanks so much, everybody.
Thank you.
Bye.
I know.
Bye.